Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these, my charts. This is all my own original work because I think you deserve to have that. So with that, LME 3-month nickel. Okay, so just to remind you once more, and it is a timely reminder given what has happened 6 weeks ago, as I've said here repeatedly in this commentary for months and months, the most significant feature of this market has been the key lows, and they're even valid now today, the key lows of 2021 at 15,665, which led to the lows of late November 23 plus the lows in 24, and I suppose also the congestion this year in January, February, late April, May, early June, and the high 6 weeks ago, and also the recent move higher last week and this. I'd also add to this that for many months I'd also highlighted how the 15,840 level, along with this low at 2021 at 15,665, was and is also still a key level. So at 15,665 we saw, moving down through it 5 weeks ago, the gold long moving average currently at 15,520. And a few weeks prior to that we saw the significant bright red upper time currently at 15,195 of the early October 2024 to mid-March 25 bearish shift pitch hook, which is a key showrunner for this market here this year, along with the mauve medium moving average currently 15,305, also moving down through it. These are now below the congestion, below the next congestion below for each of them, which is the 50% Fibonacci line for 2025 at 15,325, and the mauve medium moving average is now very close to becoming support, though not yet. We have also close into the market, now acting as support, the slowly declining green short medium moving average, currently 15,180. As I've said repeatedly before, looking at them all together, some of these are some pretty, or had been some pretty heavy duty resistances which had earlier capped the market. This highlighted what happened last week when prices punched up and closed over the combination of the bright red upper time and the 50% Fibonacci line of 15,325. We seem to be on the verge of stabilizing over this bright red upper time, though not as yet. Not as yet over the 50% Fibonacci line. Indeed, the gold long moving average cap prices, and we're as a result lower today. That all being said, if we take a step back and look at the bigger picture, I said 7 weeks ago, and I quote, over all of the recent action, we have the bright red October 24 to mid-March 25 bearish shift pitch hook in charge. The question is whether the bright red upper time can withstand the pressure building up to challenge it. If it does, then, and I quote, the hesitation we saw in April or May ahead of the 16,000, 16,780 area was enough that we can look at the mid-April end May action as a double top pattern, even Eve type. 7 weeks ago, so that is now actually 11 weeks ago, we reached and breached the neckline for this pattern down in the 15,200 level, just below the 50% Fibonacci line for 2025 at 15,325. End of quote. Now I further added, and I quote, you would need confirming consecutive closes below this level to contemplate the downside. But whilst I cannot set targets below, I can indicate potentials. Thus, a primary potential after a confirmed break low would be down in the 14,835 zone, so not too far, whilst the secondary potential lower will be down in a 14,380 zone. I say again, these are just potentials, but ones that might come about as targets if a move lower happens before I get a chance to commit, or to comment actually, next time. And that's the end of the quote. 11 weeks ago we tested lower to new lows at the time, and led me to clarify the status of these two potentials of a primary target reached 7 weeks ago, down in a 14,835 zone, with a secondary harder reach target X1 down at 14,380, which is live, still live. I added to this 3 weeks ago, and I think these comments still matter, and I quote, a secondary target X1 is once more, if not directly under threat, then in the region of being threatened. Only a concerted move over and subsequent stabilization over the combination of the bright red upper time and the gold long moving average would lead me to reassess the viability of this secondary target X1 that is below. End of quote. Now, those words still stand, and I've watched the market breach the first part of it, the bright red upper time, though we have so far fallen short of breaching the second part, which is the overhead gold long moving average. All this action nevertheless suggested to me a new pattern emerging, a late May to date rectangle pattern, currently 14,935 to 15,665. That key level at 15,665 again. This is just an idea right now, but the action since late May fits this sort of pattern. Well, sort of fits this sort of pattern. I'm watching carefully the market action at or near the gold long moving average, as I think will become vital for now. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is the thoroughly broken, but even now, still refusing to die, old dark blue May to August 2023 bullish shift pitch fall that subsequently acted as an August 23 to April 24 bull channel, especially the lower and middle times. This one still will not die. Even when I thought 19 weeks ago it had finally expired, it came back like a high functioning zombie, influencing and impacting the market, especially the dark blue lower time below, currently at 27.05, and more recently the immediately overhead dark blue middle time, currently at 28.70. This middle time had the now flatlining gold long moving average, currently at 28.15, crossing down through it 5 weeks ago. Next, looking below, well, as I said 10 weeks ago, I quote, I'd keep an eye on the green short medium moving average, currently 27.70, and the mauve medium moving average, currently 27.20, plus what I suspect may be a key level, and that's the 50% Fibonacci for the whole March to April move at 27.55. This is not the whole of the 2025 action, just the whole of the major move in the last few months. End of quote. These three have, last week and the past, acted as a base of support, a base of action for the latest sweep higher. However, over all of this, please remember the words I said 7 weeks ago, and I quote, so I finally left with a choice. It's actually quite a long quote, I'm sorry about it, but it's true. So we're finally left with a choice on the interpretation of what the whole late March to date drop and hesitation might be. So is it a basing action for a possible future attempt higher, back up to the broken dark blue upper time, which is currently at 30.35? Or is it hesitation, a somewhat large hesitation with potential down to the 23.10 zone? Right now it's not easy to say which, but I would keep an eye on the following: the short, medium and medium moving averages, the 50% Fibonacci line at 27.55. They all have given a clue to the somewhat bearish future, but this has been countered by the big old dark blue lower time, which is still here. End of quote. Yes, the big old broken, repaired dark blue lower time lit the fuse for the latest attempt higher late 6 weeks ago. But the then combined overhead gold long moving average and dark blue middle time dropped a whole load of sand on it. And as I said 5 weeks ago, and I quote, may have extinguished, at least temporarily, the bullish incentive. End of quote. Since then, the bullish flame has gained strength, though we still have not managed to push up beyond the dark blue middle time or the high seen back in late July. However, that has not stopped the market from trying higher towards that dark blue middle time. Beyond that, we have a small congestion between 29.05 to 29.17, made up from the July and August 2021 lows respectively, but what seems a better resistance maybe between 29.58 to 29.67, again not a very wide area, made up from the April 2019 high and the big old 50% Fibonacci line of the 2008-2022 move respectively. However, first the market has to overcome the dark blue middle time, and that's going to be a question on its own. LME 3-month tin. Okay, so the big picture here continues to be centered on the dark blue late November 24 to mid-April 25 bullish shift pitchfork. We are once again in between the lower time below, currently at 30.805, and the middle time above, currently at 35.590. In truth, we're just under the middle time. Now, as I have said here many times before, much like other metals I've discussed here today, there's a number of patterns affecting the market here all at the same time. From the bottom upwards, and this really is from the bottom upwards. We have the low of April and 2025 so far at 28,925, and that's just below the 2011 high at 29,005. I know this is a long way down, but it's best to make a note of it than not. Next we have the slowly rising long moving average, currently 32,045, and the closest support from the medium moving average, currently 32,830, and nearer short medium moving average, currently 33,600. Wow. Yeah. Though this latter one is to my mind still suspect. Then there's the neckline extension, currently at 32,805. Of the April 24 to April 24 head and shoulders continuation pattern. This had been a resistance in the past, but is now support. And I just want to amend something I said earlier. The short medium moving average. Yeah, that's right. That's right. Don't worry about it. Then there's the neckline. Let me go back in. There's a neckline extension currently at 32,805 and the April 24 head and shoulders continuation pattern. This had been a resistance in the past, but it's now support, as we saw back in July. Looking closer to the market, what 4 weeks ago was resistance is now support is a small but significant congestion of the previous all-time high back in April 2011 at 33,605 and the close by 50% Fibonacci line for the whole of 2025 so far at 33,660. These two have interfered with play, and that is to be remembered going forward. Closer still and penetrated last week and this week, looking like prices are stabilizing over it, is the next 50% Fibonacci line, this time for the March to October 22 move at 34,175. Meanwhile, looking overhead, we have a trio of resistances that are actually now separating apart. They are the dark blue middle time, currently at 35,590, the bright red neckline extension, currently at 35,795, the August to November 24 head and shoulders top, and interesting, though I'm not sure how good it would be, bright green lower time, currently at 36,625 of the broken November 23 to November 24 bullish shift pitchfork. I've been on the verge of retiring this last one for quite some weeks now, as it was broken way back in April, but it has seen some sort of good action as a dynamic resistance, so I thought it's still best to still include it. Overall, I'm on the lookout for the next pattern idea for more than 1 week now, which so far has not developed.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.